Hey, this is David for Big Bits, and in this video we're going to take a look at the Stochastic Indicator as part of the Indicator Explained series on TradingView. And in this series what we are doing is we are discussing an indicator, discussing kind of how it's used, what it is, and most importantly the calculation for it, and how this can help you understand movements and why the indicator kind of does what it does. Why is the stochastic seem to be very sensitive and move up and down very quickly. Okay, so the stochastic, first of all, is an oscillating indicator. It is bound between 0 and 100. It's pretty similar to the RSI in the fact that it is an oscillator and its value is plotted relative to the price in the recent trading history for the particular security that you're looking at on TradingView. So let's go ahead and dig a little bit deeper on this, and I've pulled up the Investopedia article on this. I'm going to read over some of the things on here, but we are going to, after we do this, we are going to move on to the calculation to show you how that actually works. Now, I've already mentioned this is a oscillating indicator between 0 to 100, and the key takeaways they have are that it's a popular indicator for generating overbought and oversold signals. So going back to the indicator, overbought would be anything above 80, oversold anything below 20. And it sounds very simple if you think of it that way, and easy to trade if you just buy oversold and sell overbought, but it's not quite that easy. So it's a popular momentum indicator. It was first developed in the 50s. There's some more information about that later in the article. We're just kind of going to skim over that. But the stochastic oscillators tend to vary around an average price level since they rely on the asset's price history. And that's just saying that it's relative to the average price level because we are looking at a recent range of price history and the relative level to where that price is to the recent history. So it might be a bit confusing, but when you take a look at the calculation, it's actually not really that hard of a calculation. I know this looks like it could be difficult, but really C here stands for the closing price, and you subtract from it the lowest price of the last 14 candles. That includes the current candle. So if you are at the current low, it'd be 0. So normally though, you're going to be above it unless, of course, like I mentioned, you're at the lowest, and you would divide this by the highest value minus the lowest value in the 14. So you're taking the range essentially of the last 14 candles, the highest value and the lowest value, and you are taking the range from the current value down to the lowest value, and you are dividing that, and then you are multiplying it by 100 to get your percentage value, a more readable percentage value, I should say. So calculation isn't really that difficult. There are some nuances you should be familiar with, and that the %K is sometimes known as the slow stochastic indicator. The fast stochastic indicator is taken as %D, 3-period moving average K. I'll get into this a little bit more later, but the calculation you see here is actually the fast K calculation. This is the standard K calculation, and there is a difference between what's here and what's actually in TradingView. So if you were to recreate this and try to plot K on TradingView, your values would be different because TradingView actually uses something slightly different. Now, the theory behind this one is that when prices are trending upward, so will the indicator. And when prices are trending downward, so will the indicator. So it's kind of giving you an idea of the current trend that you're working with. And it also highlights the fact that you should be looking for signals when the %K crosses through the %D. So this actually happens quite a bit, but they're essentially saying the blue line here is the K, by the way, and the orange line is the D because it's the smooth line. That when the K, the blue line, crosses through the orange line, that this would indicate it crossed down, so this would be the start of a downward trend. Now you'll also notice that this can happen down here in lower places as well, but you would also say the same for the opposite. If the K were to cross over the D, then that would represent a potentially bullish change, and you would maybe at that point expect the trend to change upwards. So that is also something to keep in mind. Not only that, but we've also already talked about the overbought and the oversold levels as well. And speaking of that, that's actually the next thing they actually talk about it. But they also make sure to highlight that very strong trends can remain overbought or oversold conditions for an extended period. And this is very true with this indicator, and price can sort of not change a whole lot even though it is high. So you'll notice that here on the chart, it is actually overbought, dips out of it and comes back in it, and it stays that way for a while. I'm trying to find a better example here of one on the daily chart on Bitcoin here, and you can see this particular area, it never went below the value here of around 66 from, let's see, pretty much April 1st all the way until the end of May. So that's something to keep in mind, and only maybe a week or a week and a half worth of that time was actually spent under the overbought value. So it can stay overbought for a long period of time, and that includes staying at very high levels like this, up above even 90, and it oftentimes on shorter time frames can go and actually tap out at 100. So that's something to keep in mind as well, that even though it is at these high values, it doesn't mean that the price can't continue to go higher. And the opposite could be said for the lower range, where once it stays down there, that doesn't necessarily mean that it is going to not be able to go any further down. Even if it's already at zero, the price can still go down because the indicator is plotting relative to the price compared to the range of prices in the recent history. So hopefully you're still following me, and that actually makes sense as to why having a high or low value on the stochastic RSI doesn't really matter too entirely much while the trend is still moving in the same direction. Now, one thing to look out for, and this article just kind of briefly mentions it, but one of the things a lot of people that I know look for on this particular indicator is what's called a divergence. And let's see if we can find one. I'm looking here, guys. So yes, here is a divergence. So this would be a bearish divergence because the price is going up, but the peaks on your stochastic indicator are going down. Now, if you're not familiar with what a divergence is, a bearish or a bullish divergence, then you can look on Google and search for that. I'm going to have a video on that here in the future. You can always check back on the channel, but this would indicate that the trend is losing its strength, and when it does change direction again, might be a good idea to change your position with the change in the trend. So that is another method that they choose to mention here. Now, we haven't really talked a whole lot about the calculation. It does talk about the limitations of it, that it can produce false signals. We've already kind of talked about that, but I did also want to highlight, since it did say false signals, and my head might have been in the way earlier when we were talking about this divergence, but no, I think it should have been something you could have seen. So I'm going to go ahead, and now I just need to remember what I was talking about, the false signals. Okay, so you'll notice here that the trend appears to change, but it immediately changes back after just a few days. So this might have been a false signal. And a lot of times you'll notice that there are false signals towards the top of these. So you might want to adjust your settings on the indicator to weed those out, or maybe even use a different indicator if you're not willing to take the risk of those false signals being in there. And of course, I'm not a financial advisor. I can't tell you how to use the indicator exactly. That's kind of why we're just kind of looking at these articles. I'm more concerned with the math and understanding why the movements happen in the indicator itself. Now, going back to the math, you will notice that we have talked about the fast stochastic oscillator and the slow stochastic oscillator. Now, the calculation we had talked about here is actually the fast stochastic calculation because it just gives us the basic K calculation, and then our D in that case is just a 3-period SMA of the K. And that's something that might be hard to get used to. And if you've looked at TradingView charts, this is, as I've mentioned before, the slow stochastic calculation. So what's the difference really? The slow stochastic oscillator basically takes your %D of the fast one, which is a smooth 3-period SMA of the K. So you're just taking the K and you're smoothing it, and you're setting its value of the K to that smooth value, which with the fast stochastic calculation is actually the D. And then with the slow stochastic calculation, the D is also a 3-period SMA of the K. So it's smoothed twice on the slow stochastic calculation. And I'll actually show you that now in the TradingView code. So this is the built-in indicator for the stochastic. I've added this to our chart, but now I'm going to pull up the Pine editor, and this code is actually available for you. I'm not sure if it's in all plans, but when you pull down this drop down, you can actually find the stochastic in here, and when you click on that, it'll load the source code template for the stochastic in here. That way you'll be able to go ahead and build on top of the stochastic however you need to. But for our purposes, I'm just going to show you how this actually works. Now, the stochastic calculation is done here using these this built-in function and these built-in variables, and you can change these if you need to, but this is the actual stochastic calculation, and you're using the period for K, which you'll notice is 14, and that is the range of candles backwards that you're looking for the highs and the lows. The SMA here is using the smooth K, but if you were to set the smooth K value to 1, you would essentially just be using the fast calculation. But since it is defaulted to 3, and you'll notice I've added the default up here, this is actually setting our K value to a smoothed SMA of 3. So this is the slow stochastic calculation, and then further beyond that, it actually takes that K value and smooths it again to get the D, and it defaults to a value of 3. Now you can change these however you like, and if you want to see what the stochastic looks like, the fast stochastic looks like, all we have to do is take the stochastic built in on TradingView, change the smooth value to 1, and this is what the fast stochastic looks like. So that's something to keep in mind. And here you can see there are probably definitely a lot of false signals. So you can obviously play around with the different smoothing methods, and you can try and reduce some of that lag to find signals that better suit your trading method. So that is pretty much it for this particular video. I hope you've enjoyed it. There's several other videos like this where we go through and explain these particular trading indicators, how to use them, and how the math behind them works, so that you can understand how the changes are going to occur or what impacts might happen to those indicators, no matter which way the price would go. So if you want to check out some of my scripts and the Pine Script tutorial series that I have on YouTube, that'd be great. You can check out my profile on TradingView, BigBits.io. There's links for that in the description of the video. And while you're down there, if you don't mind, please just go ahead and like the video. You've watched it all the way through. I would really appreciate that. And on your way back up, you can also hit the subscribe button, because if you've watched the video this far, you're probably going to want to see other videos. At least I'd like to think that way. So if you don't mind, go ahead and subscribe, and you'll get more videos like this again in the future. But other than that, I'd like to thank you and have a great day.